Good morning, everybody. Happy Friday. I always get the good day, right? The Friday where you're just kind of looking forward to the weekend. Everybody's working for the weekend. What can I say? That's my best effort without auto tune. I should probably get auto tune going here. Okay, let's see all your beautiful faces. I'm going to show you my screen here, and I want to make sure that I can see all your comments. What a week. Another crazy week again, which is sort of, we get these weeks where it certainly looks like things are about to unravel, and they really don't, right? They don't unravel. They re-ravel. They threaten to unravel, and then, oh my gosh, it's Thursday. Sorry, Vicky. Sorry. Normally I do the Friday show, and I'm like, I must be in Friday mode already. I'm thinking, I must be in Friday mode, which is okay. It's okay to be in Friday mode. I'm gonna have a hot tub. I told you guys I'm gonna invite you into my hot tub if you join Turbo Income, the lifetime program that we offer. That we offered. I don't know if it's still available. You better ask Vicky, ask Christian. But we have a lifetime offer where you get all of me in my hot tub for life. I'm just kidding. In my trading hot tub, which is where I come up with my best ideas. So it's probably, that's probably good. Yeah, Ryan can help you out there too. So here we are, wonderful, a wonderful week of volatility again, which in my view, gives us opportunity. So on shows, I've been talking about how about 15 days ago, I said I've moved out of beta and super high beta, right? Those things that have been moving like crazy, the Oklos, the big swingers that we see out there, the quantums, although I haven't really been playing quantum, but we've seen a big kind of pullback in many of those names. But just quickly about me, Turbo Income. I am the director of income trading here at Option Pit. $1 billion managed over time in option strategies. I was a pro market maker for 15 years, only getting a check if I made profit. So think about that. I literally did not get paid unless I made money. Who do you want to learn from? You want to learn from some Joe Schmo on the internet who just learned options 2 years ago, or you want to learn income, trading, volatility, VIX, you name it, from a group of people at Option Pit, the best roster of people around. There's absolutely no question about it. People actually do what they teach and teach what they do. And that's a really, really big difference. Otherwise, you're going to be missing some important ingredients. So 10 years managing about 12 income funds as well, and some Black Swan funds, downside protection. So offense and defense, right? Offense and defense. I put out a post this morning. I said, listen, I'm not oblivious to risk, right? That's why I hedge, but I also don't worship risk. And I talked about how it's amazing. I had a mentoring student come to me, it was last year, and he said, I've been following this guy, I don't know, I can't remember if it was Hussman or one of these sort of perma bears. And he said, I've been following this guy for like 10 years. And he's so smart. He makes sense all the time, but he never makes any money. And I said, you know what? He said, and this gentleman, I won't name him in case he's watching, but he said, he's not successful. And I've been listening for 10 years, and I just have to say, I'm sorry. So I talked to him because he had some service. I talked to him and I said, I'm sorry, I can't continue with this. And he said to me, he's not successful, but he's just always a perma bear. And I said, you got that wrong. He's very successful because you've been following him for 10 years. So what you have out there with certain people is you have a little bit of 3-card Monty. You know that game where you're like shifting the shells around and you're like, oh, is it here? Is it here? Is it here? Your interests are not aligned with people like that because their interests are in selling fear and newsletters, the Rosenbergs of the world, who I love. I read all that stuff because I want to know. I want to know what those people are thinking. And I want to know where my blind spots are. I'm not an idiot. I'm very aware of stocks can go up and down. And we want to know, he is selling you something and your interests are not aligned with him. Your interest is in making money over time. His interest is in keeping you in his ecosystem of, oh my gosh, the sky is falling. And so I thought that was kind of an interesting. Look for that newsletter from me at Option Pit. I thought that was sort of an interesting little take on what's going on out there, right? I'm not saying ignore risk, but let's keep things in perspective. And this is an amazing, amazing world. We have got some incredible things. So I have been all-star of option trading with people like Tom Sosnoff. I'm on Oliver Rennick's show. Here I am recommending ASML, Netflix at $225 when Bill Ackman was getting out of it. I'm a Lipper Award winner for my income fund. So you want to listen to somebody who kind of gets this stuff, go ahead, join Turbo Income, or at least get on that mailing list. Ryan can help you with that. So let's talk about what are the pain points. Well, one of the things I said a few weeks ago is I said I'm getting out 130% invested, meaning levered, getting in. I'm not recommending anyone does that, but I was in and I said I'm going to 35% cash. I'm getting out of high beta, which has gotten crushed, and I'm moving into MAG. I'm moving into primarily Apple and Google. This is all documented. This is all on public shows. Into Apple and Google, which have done well, into IWM, which is right around where it was. It hasn't exploded higher yet. It had a little problem from those regional banks. It has that banking exposure, but sitting there, and I'm still a big believer in it, right? As you guys know, I've been talking about this. This is a part of the market where people may not have to push into higher beta kind of stuff, zero income areas, because the benefits of AI are going to push throughout the economy now. So what that means is that you can now start to look elsewhere and say, oh, hey, this company that we've been ignoring for a number of years, trading at a reasonable multiple, is something that may benefit from the untold benefits of productivity and if these companies figure it out. So that is my sort of idea, is that you can sort of broaden out. Now, is AI over? Not a chance. AI is nowhere near over. We are still going to have waves of mania. I traded in the 90s. .com was the same. You get pullbacks in areas. I'm going to show you this chart right here. We get these pullbacks in areas. So here you can see here. This is converging now, right? So you've got this companies with negative earnings outperforming companies with positive earnings. So what you've got here is a little bit of a rotation out of the kind of fluffy stuff that's fun to trade, and I think we'll have another run. I've been pushing more into beta yesterday, and I'm gonna take another look again. I'm gonna look at interesting things. There's a semiconductor name that I'm gonna be talking about soon. This is my number one semiconductor name. If you jump on my free mailing list, I'm going to write about this next week. And this is a name where there are incredible supply shortages and a couple of competitors. I've been talking about this for a while, so you get to know about it first with me. But there are a couple competitors who just came out and said they're raising prices 30%, supply shortages in an absolutely integral component to what's going on out there in the build. So not off of AI. I think it's very interesting. I think there are both fun type plays, and I think there are very steady Eddie. I don't think MAG is really that expensive. Apple's kind of expensive, but I've been saying buy that for $60 now because I think it is in the right place at the right time as AI in your pocket becomes more of a reality for people, and they're selling phones, right? So I still like that. There are stories out there and there are valuation plays out there, and there are combinations of that, which is that stock that I told you about. Get on that mailing list. Next week, I'm going to tell you about it. It is story, incredibly strong story, plus valuation is actually kind of reasonable. And what that means to me is that you can play options to the upside because there's a reset coming. So I love stocks like that where there is a combination of sometimes real world and digital, maybe a company that's sort of able to kind of transition to a better version of itself via AI, things like that, like a rocket, right? I think they're going to do great as the housing market unfreezes, right? So that combination of things. So that is where you can potentially get these resets that we've seen, right? I did it on SoFi. I did it on 20 other stocks this year where I said, listen, there's a reset coming and options are cheap. And then the stock can go boom because the market suddenly reevaluates the value in this name, right? It goes, uh-oh, we've gotten the narrative wrong, and this name deserves to be up here. That's a reset. That doesn't happen in everything, right? That happens in some names that are not being recognized. And that's where you got to be a little bit ahead of the curve there. I know market efficiency and all that. The market knows everything all at once. Not true. It just isn't true. I'm sorry, but market theorists, it's just not true. We see this all the time where the market is not recognizing something that is important, or negative, right? It's just that's a fact. So I don't believe in that crap at all. If that were the case, you'd be riding the market up. You'd still do well, probably just based on, population spending more, like basic sort of growth in GDP, inflation, whatever. But there are opportunities out there, and that's why you need the pros to figure that out. So some nice moves today. Nebius jumping again. We were buying back calls there. We had some covered calls. And of course, the name that I've been talking about, definitely moving into that. What I like to see is data. So when I mentioned this earlier, I said, boom, data is endless, right? So when I said I was getting out of high beta, I stayed in some. Now I've got some in Figma. I've got a few high beta names that are need to do a little bit of work. But I said data is very interesting because absolutely without a doubt, and that's what I like when I want to invest in a theme in a bigger way, when I want to kind of press, right? So you can have a portfolio where you kind of have some ideas here and there, and then there are certain ideas. I'll tell you right now, Apple, Google, and this name, this category are areas that I'm pressing. Hood was one of those earlier in the year. I got out a little bit too early. Hood was one of those press areas. I said at $30, at $35, I said, this company is just ridiculous. It's unbelievable. It's taking over on so many different metrics and levels, KPIs and things like that. It's just unstoppable. So, there are some names. Reddit was one, got out at 260 in our long-term portfolio. You get a long-term portfolio in Turbo Income, which is up way more than the market this year, way more. We got out of Reddit at 260. So what I'm saying here is one of the things I said is I like data. That now power, very important. We're not going to have enough power. There's also, we want to keep in mind some of those non-negotiables. I think there is WNA. I think there's a risk of earnings disappointment in anything, right? Anything that's had a really, really good run up. With Nebius, I'd say it's down about 30% from the highs. We traded at 95, 94 yesterday. And that's where we were buying some calls back, and I was actually adding some exposure. So I think it's interesting. I think option prices are a little bit on the high side. Oh, Jerry, thank you very much. That's a wonderful thing to say. Some nice testimonials there. Look, this isn't a game of perfect, but you can do things better, and that's absolutely what we do every single day at Turbo Income. So I said Snow, Palantir is expensive. Datadog I really, really like as well. And yeah, exactly. I think it is, Jerry, because that big deal with Microsoft, that is really, really good support of what they're doing, right? This is nowhere near over, right? So, and I personally, I think you can start adding to some high beta right here. I started dipping in yesterday. So I've had all this cash and I'm going, okay, now I'm not rotating out of MAG because there's certain names there that I just think are still great. So it's a kind of, it's going to float all boats as my Roaring 20s scenario plays out. I think there are going to be a lot of beneficiaries to that. And I think my portfolio is going to be sort of a good chunk of steady Eddie balance sheet heroes, as I call them, like the Googles. And I think Google's really undervalued. I know I was a bit negative on it, under 200, under 180. And then I saw that they were switching. Like, I'm using Google more again because they give me the good AI exposure, right? So at first it was, well, let's move to ChatGPT because we don't want to deal with these ads. But now ChatGPT is saying, well, we're going to do ads anyway. And Google has been extremely smart for a company that's been a little bit dumb the last 8 or 9 years, generally speaking. Not really it's hard to be nimble when you're massive and you have all this wonderful revenue coming in. there's no incentive to really kind of do much, as hard as I'm sure they try. But the fact is that they are actually becoming, I think, quite possibly the best AI play out there. ChatGPT is extremely strong. They're doing great alliances. It's you got to make competent bets, and it is a time where we're starting to. I have been adding some put spreads. On my Goldman Sachs, I added a put spread a few weeks ago. So I think we're in an environment where, in my view, you kind of continue to play for a melt up, but we don't know what's going to happen to jobs. But I'm going to show you something very interesting. I want you to see this, so don't go anywhere on this idea that I have. But data. So when I think about data centers and all that, they're going to continue to be built out. GPUs are going to be very competitive, right? NVIDIA has that lion's share of the business there. It's very competitive. Now, data is absolutely, without question, companies are going to want to get involved in AI. This is beginning, right? This whole agentic AI, companies trying to figure out how to use it the best way possible. If you think that's late innings, you got to get on the train here. This is early innings. Next year is going to be an incredible reveal of how companies are starting to take advantage of this. And it's going to play into the Snows, the Palanters, the Datadogs, and things like that. These are the companies that come in and go, hey, you want to figure this out? We're going to help you figure it out. Pay us $1 million. They just keep increasing their number of customers paying over $1 million in Snow's case. Revenue retention is incredible. So people don't just come and spend money, they stay and they spend more money, right? So those are stories that I really, really like. Now, my next point here is that, so we can sort of see here, we've got like more compute, more data, more storage, more of everything. I love anything to do with storage and memory and things like that. Absolutely. Killer trades here. We can do some turbo trades as well. Now, what I want to show you guys is an interesting thought, because there's this, redundancy. You need redundancy. 2026 could be very interesting. And that's the thing I talked about. I did a bit yesterday, and I sort of talked about the Shiller P and all that, and how it's basically not giving you a good, I know valuations are high, but if you look at Shiller, it tends to take data that's really kind of sort of outdated a little bit. I don't want to sort of, sugarcoat the fact that there are some, hold on, let me find this little thing. There are some, valuation issues in certain areas. I mean, like Oklo, obviously those are the areas where you're going to want to be a little bit more careful. But look at this here. So you've got, the one thing you want to remember is that the market, a lot of participants in the market are following the so-called experts, right? So the so-called experts, what have they done? They're wrong on GDP, they're wrong on growth, they're wrong on profit margins, they're wrong all the time. So remember that. You've got, I don't know if I have the chart here, but basically, I don't know if I showed this last week, but the stock pickers, the funds, all these smart guys on TV and girls on TV with their $3,000 suits sound fantastic. Boy, they talk a good talk. But the fact is, stock picking in the fund world is at multi-decade lows. Multi-decade lows. All these people on TV, do they ever tell you about their performance overall? No. They talk about what makes sense to them. And I'm not saying I love watching CNBC. I think it's great to hear all this stuff. It's all information to me. I don't ignore anybody. I love it all. But multi-decade lows in fund performance versus the index, something like 20%, under 20% of funds. Don't quote me, but it's unbelievable. And the thing is, look, they always get it wrong. The analysts get it wrong. They're always wrong. And what are they doing this time? Well, let me show you what they're doing this time, because they're sick of getting it wrong. So they are, here we go. So first and second quarter of this year, companies beat by the largest margins since 2021. Wow, big recession, eh? Companies beating massive margins. Yeah, big recession. And this quarter, they have not lowered their estimates. They're going, wait a minute. Finally, these analysts are going, okay, maybe I shouldn't lower my estimates anymore. You're kind of making me look bad every month, every quarter. So they haven't raised them as much. So this earnings period is a little bit more challenged because we don't have those sort of, lower hurdles to jump over, right? They were lowering them, the tariff effect, all this stuff, right? It's just not coming, it's not playing out. We had GDP data, 3.9% the other day. Yes, I know it's AI, but that's AI. AI is AI. It's real. It's like, it's like saying it's not something very integral to the economy and to the infrastructure build out is not important. Okay, if you believe that, then that's not important. Is it going to have an effect on certain segments of the working population? 100%. 100%. This is going to be a difficult time. I'm going to talk about this in a moment. I'm going to talk about Salesforce, so hang in there. So here we are. They've lowered their expectations, and that's fine, right? That's fine. Here's your, I want to show you as I talk about broadening. Oh, here's the Shiller, right? Shiller takes into account all these lower periods, 2015, 16. These are earnings, and look at what's happened. The earnings power in the S&P just keeps rising. So the problem is some of the valuations are pulling in data from back here, and the reality is this is sort of our new reality. Is it juiced by stimulus and rates and whatever? Yeah, of course it is. Of course it is. But you want to play, I don't make the rules, but I'm going to play within the rules. I'm going to play in that sandbox that they've created, right? Yeah, Jose, unbelievable. You see what people are doing. This is really incredible what you can create in a very kind of simple, free tool. Everyone's got an expert in their pocket now and on their computer. How do you think that plays out when everyone has a printing press? It's going to be mind-boggling. It's going to be full of disruption. There are going to be companies that get sideswiped. So you want to know what you're doing. But look, we've had a lot of movement in the market. What's the S&P doing? Nothing. What's the VIX doing? Not a whole lot. Because there's movement under the hood. There's a big shift going on out there. This market is shifting. They're still in MAG, but we're seeing a move into some areas. Now look at this. Is this only about technology? No, it isn't. Look, information technology, financials doing great. When do you see financials doing this amazing in a recession? Like, I don't know, these people who are say recession's around the corner, it's not happening. What do we got here? This is, this stupid thing's in my way. Stop sharing. It's S&P overall, industrials, materials, energy, not far behind. Healthcare. What do you think AI is going to do to healthcare? I've been positioning in biotech and healthcare lately because take a look at the healthcare chart. Look at that healthcare chart versus the S&P. Look at XLV versus S&P. It's starting to go. You think they're not going to be cutting costs? You think they're not going to be compressing the time it takes to make discoveries and to cure diseases and ailments, et cetera? No, it's going to be unbelievable. We are not going to believe what's going to happen over the next 5 years. And anybody who thinks AI is an exaggeration just isn't paying attention to the speed at which things are improving. The singularity is coming, if it's not already upon us. So the last thing I want to look at before I let you guys go, I know you want to get to all your classes and everything. I'm not going to go over vols again. I've already done that a couple times and how, I was right, blah, 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 blah. And now options are expensive. Okay, I get it. So I get it, Hans. Don't tell me more about that. But what I will tell you about, whether you like it or not, is this, right? So this AI eats software. What did I say during special situations AI months and months ago? I said, I'm short Salesforce, I'm short Adobe, I'm short Fiverr, I'm short Upwork, made money on all of them. And if you're paying attention, I flipped to long Fiverr, long Upwork, made a bunch of money on that, still have a bit, but I think that's still a good story. But now I'm a little bit more constructive. So look at this. I think this is an amazing story that I think more people should be paying attention to. Salesforce CEO said he cut 4,000 support roles. So remember when that came out? That pushed the AI eats everything narrative, right? It's going to eat software. It's going to eat processes like what Salesforce does, which I think is kind of tough. That is one ingrained ecosystem. And I do believe they have time to pivot. So, but look what he says here. Salesforce has seen benefits from using AI tools. In the last 26 years, he said the company's had more than 100 million leads they couldn't respond to. These are the jobs that are being trimmed. The jobs that can be automated, the reach outs. You can create agents now that will reach out 24/7 and make that initial contact that could very well become a customer. Now what's happening, released recently? Face-to-face communication, yes, in this business, it may not be the case in all businesses, right? If, Adobe, I would be a little bit maybe more on the fence about, because, if ChatGPT can do PowerPoints and, a lot of the crap that they do, then maybe that's a bit more of a challenge. But Salesforce, with a massive ingrained footprint in so many businesses, you still sort of need that communication. AI doesn't have a soul. Benioff said he's hiring thousands. So he's cut people and he's hiring more people than he cut. AI is potentially going to create jobs in many areas, not all areas, but in many areas. And that, I think, is very, very exciting. So Salesforce and Adobe, here we go. We can see price to free cash flow. These are not expensive companies. Look at them. They're trading way below their medians. I'm not saying this is a 4-year trade, because I think over time, disruption is going to play out in these spaces a little bit more. But I think there could be a little bit of a catch-up trade. Call me crazy. I don't know. I just think they may put up better numbers than you think. They didn't last time. And I thought that they would, but the stock's higher now. So I think that's a very interesting place to be. And I would say that we're starting to see some nice, let me show you snow. What a beautiful chart. Here we go. Here's my MTI. It's starting to it's yellow, so it's a bit more income-y right now. And so I'd say that's a place where you want to get a little bit of exposure on the income side, but I think you want to be ready with the turbo. Remember, in turbo income, we love income, but we are also strategically greedy. So here we go again, Datadog. I want to see this act a little bit better before committing to a turbo type trade. Some stocks have had a little trouble, right? We've gone from green, kept you in, and then got you out right here. So got you out right here. That's the MTI that we use in turbo income. And then where's our CRM? CRM's got a little bit of work to do, had a nice little push here, starting to get better. Look at this. This is telling you, stay the heck out of here. This is a waste of time. Now we're starting to see a bit more yellow. Let's see if that develops into something interesting. We hope we're on the right track with that. But snow, this is one that we had in special situations. It's going. Okay, guys, so that's 10:30. I hope you enjoyed that. Let me see any questions at all. Strategically greedy, Mike. There's nothing wrong with greed. I've had students call me up and say, Hans, I've done fantastic in income trades and I've missed probably 500 grand in wins. That's why we have, I think it's 11 wins in a row in my longer term plays, and we've won on almost every single turbo trade. I hope you just heard what I said. We have incredible longer term. I hate giving up upside. So if you think turbo income is about giving up upside, absolutely not. You have to play both sides. You've got to read the tea leaves like I've been reading them perfectly over the past while. And you've got to get involved and let the market tell you what you need to be doing, and don't fight it. Okay, folks, have a wonderful day, and we'll see you next time.